We had some news yesterday that the UK was going into a double dip recession, or is in a double dip recession. A lot of worries over Europe. What's going on out there?
Well, the latest thing is that now we're hearing that European leaders want to refocus on growth. They want to put in policies and requirements that make the bailout efforts or the rescue efforts also consider the growth element rather than just austerity. But as we're seeing, the issues in Europe are not just limited to Greece anymore. They've gone into Spain, Italy. We're seeing them all over the so-called pigs, the periphery of Europe, and they're also getting into the core a little bit. There's a French election ongoing right now, and we're seeing that the socialist candidate opposing Nicolas Sarkozy is pushing for reconsideration of France's participation in the efforts to save the rest of Europe. As you mentioned, the UK now in a double dip recession. Clearly, Europe is a big problem. We're going to see what the real impact is on our markets here if that recession is not, if the declines over there and the weakness over there is not arrested by some kind of policy reaction, or, as I said, growth, which is not something you can just force with a lot of talk. There needs to be action.
Are any of these problems showing up in earnings? It's earnings seasons right now, and I'm wondering if any of that's showing up.
We definitely heard from a number of companies about challenges in Europe. Whether they're companies in Europe but that deal globally. Deutsche Bank today came out and talked about uncertainty in the market that has cropped up after things kind of calmed down a little bit earlier this year. We're also hearing it from the JP Morgan Chases of the world, who have said that conditions in Europe remain a challenge and that the financial system in Europe needs to do more deleveraging. Whirlpool today, sales in Europe were down 8% year over year in the first quarter. A tragedy? Not really, but a sign that conditions over there continue to be weak. And Chairman Ben Bernanke, the Federal Reserve, mentioned yesterday during his press conference that the Fed reinstated some language into its latest statement about market uncertainty and financial markets uncertainty because the European situation has flared up again with concerns about Italy and Spain and their debt and their bond yields. So we're certainly seeing it come through a bit. It's a question of whether this is something that's going to get worse and worse, or if it's something that will flare up and then ebb and flow as it's done to this point. But, for the market as a whole, Europe is still sort of the big bugaboo that everybody seems to be worried about.
So the big question is whether or not we're going to have an ugly summer as we did last year with the Euro crisis kind of spoiling the party that we've already had in the market.
We could certainly go that way. We've had a nice run to start the year. We're up, more than 10% on the S&P 500, even with a little bit of some headwinds recently. But, that sell in May and go away stuff that people talk about, that old adage, might come through again this year.